Okay guys, rain, sleet, or snow, I am back with another crypto video. This first story here is a story from Decrypt, and it reads, Tesla details $140 million worth of Bitcoin loss in an SEC filing. The electric car company saw its Bitcoin losses double since 2021. Tesla lost over $140 million betting on Bitcoin last year, according to a Monday filing with the U.S. Securities and Exchange Commission. The electric car manufacturer took a $204 million impairment charge while gaining $64 million through converting Bitcoin in 2022. In the year ended December 31st, 2022, we recorded $204 million of impairment losses resulting from charges to the carrying value of our Bitcoin and gains of $64 million on certain conversions of Bitcoin into fiat currency by us, Tesla said in the filing. An impairment charge describes a reduction or loss in the value of an asset. It can occur because of the change in economic circumstances, like the crypto winter that gripped the market after the collapse of Terra Luna in May 2022. The annual disclosure to the SEC comes less than a week after Tesla's quarterly earnings report, which included no Bitcoin transactions, but nonetheless saw the value of its holdings decline, generating a $43 million loss for the last 4 months of 2022. In February 2021, Tesla invested a staggering $1.5 billion in Bitcoin, making it one of the largest corporate holders of the cryptocurrency, second only to MicroStrategy. At the time, Bitcoin traded at $46,364 per coin. By November 10th, 2021, Bitcoin saw its all-time high of $69,044 per coin, according to CoinGecko. But the good times did not last, as Bitcoin and the rest of the cryptocurrency market went into a free fall in 2022. As of January 31st, 2023, Bitcoin is trading at around $23,051. Tesla's impairment losses nearly doubled since 2021 when in an SEC filing last year, Tesla reported a $101 million impairment loss on digital assets and $128 million gains after selling Bitcoin in 2021. By October 2022, Tesla reported to investors that the company still held over $218 million in Bitcoin after selling 75% of its holdings in July, around $936 million at the time. As with any investment and consistent with how we manage fiat-based cash and cash equivalent accounts, we may increase or decrease our holdings of digital assets at any time based on the needs of the business and our view of the market and environmental conditions, the company said in Monday's filing. In the filing, Tesla calls its Bitcoin holdings indefinite-lived intangible assets. These assets are periodically reviewed to determine if their value on the balance sheet exceeds their fair market value. As Tesla explained, these impairment charges may affect the company's further investment in Bitcoin. For any digital assets held now or in the future, these charges may negatively impact our profitability in the periods in which such impairments occur, even if the overall market values of these assets increase, the company said. Neither the quarterly earnings report nor the SEC filing identified any specific digital assets besides Bitcoin. The company is believed to hold Dogecoin, however, as it accepts the meme coin as payment, and CEO Elon Musk himself is a self-avowed fan. Now, that's definitely interesting that the filing didn't disclose if they have any other investments besides Bitcoin. I definitely think they do. I don't think it would be smart. Really, I don't think it's smart for a business of that magnitude to put that much money in a new asset class to begin with. but at the same time, they probably have more information that we do as far as the future, and they're trying to get ahead of everything. But part of the reason I also think it was a weird decision for them to do this in the first place is because Tesla, the company itself, doesn't make a whole lot of money, or at least they haven't had a reputation for making a whole lot of money off of actual car sales. A lot of the revenue they've seen over the years have come from government subsidies. So, I mean, I don't know. A lot of people still believe Tesla's gonna go bankrupt. I definitely could. I'm on the fence. I don't know. I can't predict the future, but stuff like this makes you wonder, like, if it's gonna happen, and it seems very, very, very possible. But I definitely want to know what your thoughts are on this. The next story here reads: defunct crypto lender BlockFi granted approval to sell assets. Suitors for BlockFi's distressed assets have until February 20th to make their bids following fresh approval from the bankruptcy court. Defunct crypto lender BlockFi has earned court approval to sell its remaining assets. BlockFi, which lets users earn interest on their deposited cryptocurrencies, fell into bankruptcy in late November 2022 due to its connection to FTX, which had previously extended the firm several lines of credit. These included a $250 million line of credit in June 2022, earmarked to quote-unquote bolster its balance sheet. As per a new filing made in the New Jersey Bankruptcy Court on January 30th, potential suitors will have until February 20th to submit their bids for BlockFi assets. If applicable, an auction for the assets will then be held on February 28th. Creditors representatives have until March 16th to object to the sale of these assets. BlockFi first applied to appoint independent appraisers, auctioneers, or other professional persons for the administration of its bankruptcy case on December 19th. The assets up for sale could potentially include the multitude of crypto mining equipment that the company holds. As per a report from Bloomberg last week, the company was considering offloading 8,000 Bitcoin mining machines in exchange for up to $160 million in loans. Decrypt has contacted BlockFi for comment on the news. BlockFi's creditors. Shortly after the crypto lender filed for bankruptcy, it emerged that the firm owed more than $1 billion to three of its largest creditors. This included the SEC as a part of a $100 million settlement with the regulator in February 2022. In total, BlockFi bankruptcy filing indicates that the firm owes money to more than 100,000 creditors. The firm also petitioned that the bankruptcy court in December to allow users to withdraw their holdings, calling the move an important step towards our goal of returning assets to clients through our Chapter 11 cases. So yeah, definitely let me know what your thoughts are on that. Like, as far as, like, did you have any assets on BlockFi? I was aware of BlockFi's existence, but I didn't use it a whole lot, really. But I definitely, like, there's certain companies that I wasn't surprised when they went down last year with all that nonsense that happened. But BlockFi is actually one that actually caught me off guard. I never really heard anything shady related to it. But again, many people have always said that when it comes to what people refer to as bad actors, that usually you gotta wait for a recession or a bear market to see who was swimming naked, so to speak. I think that was like a Warren Buffett quote. But last story I'm gonna get into here is actually, it's about Celsius. You know, speaking of like bankrupt exchanges, and it reads: Celsius execs joked that the investors thought the Cell token was quote unquote going to the moon. Court-appointed examiner Shobha Pillai didn't establish whether Celsius was a Ponzi scheme, but details instances that show it might as well have been one. A string of findings by an independent examiner show Celsius operated its business in a manner completely unlike what is advertised, a report published on Tuesday revealed. Shoba Pillay, the court-appointed examiner in Celsius's bankruptcy case, was given a mandate to review its native cryptocurrency Cell, its representation to customers, and to examine claims that its operations qualified as a Ponzi scheme. She wrote that customers were sold on the concept that the lender offered better returns than a traditional bank, which is quick side note, real quick. That's absolutely true, obviously, because one of the main marketing strategies that Celsius was doing was they, like, for a while, one of their like slogans was like unbank yourself. Like, that was absolutely true. They were absolutely trying to sell that idea to people. But to continue on here, it says she wrote that I read that just now. To continue on, it says, no, I'm gonna read it one more time and just continue from there. She wrote that customers were sold on the concept that the lender offered better returns than a traditional bank, but it was not the business that Celsius actually operated. Celsius emphasized that it's put its community first, with former CEO Alex Mashinsky convincing investors that customer deposit coins are your coins, not our coins, she said. He also promised that coins would be returned to owners even in the event of a bankruptcy, her report alleged. Another founder marketing ploy the firm is said to have used is trading in its Cell token. Customers were allegedly told that they could score Cell rewards that Celsius would procure from the company's internal treasury or by buying Cell in the secondary market, which it described as a self-sustaining flywheel. From its inception, however, Celsius and the driving force behind its operations, Mr. Mashinsky, did not deliver on these promises. Behind the scenes, Celsius conducted its business in a starkly different manner than how it marketed itself to its customers in every key respect, Pillay said. Blockworks has reached out for comment on the examiner's reports. Celsius abandoned transparency promises from the get-go. Celsius allegedly failed to tell customers about its flop initial coin offering, which, you know, that's the full term for the acronym, well, for what's called an ICO. It's obviously, for people that may not know, that's what it stands for, initial coin offering. Mashinsky had initially promised to snap up any unsold tokens from the ICO, but failed to deliver on that pledge. However, the company chose to substantially expand its Cell purchases in 2020, with the intention to boost its price and timed purchases in a way that would create a market buzz around the token. Which, of course, another quick side note, a part of why that's so risky and why, of course, people are going to look at that as like a pump and dump, or definitely as like some sort of scheme to scam people, is because of the fact that as of right now, this is still a heavily speculative market, that the biggest thing reeling people in right now is still price. Of course, it's still price. So they know that if they could start running marketing campaigns, you know, discreetly, having different content creators talk about the price of Cells doing this and it's doing that, let's read these charts and it's going to the moon. They knew what they were doing, you know. But to continue on, it says, however, the company chose to substantially expand its Cell purchases in 2020 with the intention to boost its price and time purchases in a way that would create a market buzz around the token. So although Celsius customers were aware the company would purchase Cell tokens, the lengths to which it would go was kept hidden. The report stated that Celsius's head of trading desk wrote to colleagues, including the CFO, quote unquote, just to clarify between us three, the last 3 to 4 months, we bought always more Cell than what we pay as interest per week, but we did not buy it for the interest payments. That is just what we told the community. Scandalous, man. Sap, just trifling. But anyway, continuing. They later praised their secretive purchases and discussed how it led to, quote unquote, people thinking the price of sell is going to the moon. Ha ha ha. Edits to Ask Me Anything interactions. Internal managers noted that several statements Mashinsky made in his tweets during AMAs weren't accurate. The chief risk office proposed editing the AMAs beginning May 2021, even though investors may have heard them, and before they were posted to YouTube, to eliminate any misleading statements. However, Mashinsky thwarted this effort as he felt delays would lead to doubts. Throughout 2021 and up to the bankruptcy filing, Celsius continued to identify incorrect statements Mr. Mashinsky made during the AMAs, the reporter said. In some instances, Celsius was able to edit the AMAs after posting. In other instances, it was not. Employee concerns about Cell. The Examiner noted that Cell had limited utility as it could only be used on Celsius. That employees often discussed it was worthless and that the price should have been zero. Celsius also engaged in protecting the price of its token if insiders like Mashinsky wanted to cash out and make millions on his Cell holdings. The report noted an employee saying internally on Slack, if anyone ever found out our position and how much our founders took in USD, it could be a very bad look. We are using users' USDC to pay for employees. Worthless sell. To pay for employees' worthless sells. All because the company is the one inflating the price to get the valuations to be able to sell back to the company. Mind you, keep in mind, real quick, that's what employee just got exposed from the filings saying on their Slack channel. But to keep it going, Dean Happen, coin development specialist at Celsius, noticed that customer funds were being used to fund Cell purchases. In January 2021, he said internally that his title at Celsius should be Ponzi consultant. I'm gonna read that one more time. You gotta be kidding me. In January 2021, he said internally that his title at Celsius should be Ponzi consultant. And last year, Tappan called Celsius's practice of using customer assets to fund Cell purchases as very Ponzi-like. Use of new customer funds to support withdrawals. The Examiner found that Celsius didn't have enough liquidity to cover future withdrawals in the period leading up to its withdrawal pause, and that it had to rely on new customers to fund further claims. This would be typical of a Ponzi case, but the Examiner didn't explicitly state that it amounted to one. Quote, if Celsius had instituted the pause and the run on the bank continued, Celsius had not instituted the pause and the run on the bank continued, new customer deposits inevitably would have become the only liquid source of coins for Celsius to fund withdrawals, Pillay found. So that right there was, the end of the article, but they're like, again, so much is coming out about Celsius over the past, really almost the past, it's been almost a year now. And to me, anybody who's still trying to talk about Celsius in a positive light, and I'm seeing a couple of them, I'm still keeping my eye on them, but to me, that lets you know just how shady some of these people are. There's even one person I could think of in particular. I already know he was tied into Ponzi schemes and all that before he got, before he even started promoting Celsius heavy. So it's no surprise to me that even through all this, he's still trying to push Celsius in a positive light. Like these guys are clearly scammers. They're clearly bad people. They clearly had nefarious intentions from the get-go. Like, look, like, come on, man. You got employees sending messages saying, hey, listen, man, it seems like we're running a Ponzi scheme. The guy literally said you should change my title to Ponzi consultant. Like my goodness, dog. You got employees saying that the coin itself is useless and there's no utility. Now, is Celsius the only coin that has no utility? No, there's a bunch of coins. I mean, most coins, to be honest with you, don't have utility. And to this day, there's still a lot of people who undermine the long-term effects of not having utility could bring to their favorite coin or their favorite project. But I don't care what anybody says. I am on the side that believes that utility will rule when it's all said and done. Not right now, obviously. Again, everything is still moving just based off of mostly speculation and like social media hype, which is why they still pay a lot of like influencers to talk about these things. But at the same time, in the long run, I just personally believe when you look at certain companies like Samsung aligning themselves up with Theta, like all these central banks, like the one in Egypt, and all these different banks, 300 plus banks across the planet aligning themselves with Ripple. When you see these type of partnerships being created with certain companies, I mean, I don't know, man. I'm not a big chart analyst kind of guy, man. I'm more so trying to go off of just fundamentals and common sense. And to me, those companies seem to have long-term staying power. My only issue with the whole my main issue with the whole Celsius thing is I, like many people, again, because I was very busy, but then also partially because I was being a bit lazy. During the flare snapshot back in 2020, for a couple days, I put my Celsius on. I put my XRP on Celsius. I took it off, but I did it for the snapshot, and now I'm still waiting in limbo to figure out when I'm gonna get my flare, when I could have just did self-custody in the first place. But at the same time, you live and you learn, but it's just, it is what it is. Let me know what your thoughts are on these topics in the comment section below.